because the business plan shows a business lender that you have thought through your entire business model and how it works and how this business is going to pay me back. If I lend you $1 million, $2 million, if I lend you $50,000, whatever the amount is, and you want to know this as well, what is the plan? How does this business function? How does it generate revenue? Okay, so instead of like just wondering, that's just the first part, and we can go line by line. I can talk about, your experience in the industry. Do you have a reputation? Do you have financial records showing that you've been successful? Because that's also a big piece of what a financial institution, a lender, is going to want to see. How much money have you made doing this? It's almost like you've seen Shark Tank. What's the first thing they typically ask for? The money. How much money have you made, and do you have documentation and records showing how much money you've grossed, and again, how much you've netted? Okay? Because again, what a banker wants, the number one thing they want, honestly, is, okay, if I lend you this money, I'm going to keep saying, how are you going to pay me back? And you can't just tell them that I'm going to pay you back. You have to be able to demonstrate it. And that typically comes from tax returns for yourself personally and your business. And that's something else I can kind of expand on a little bit. When we look at character, we're looking at the character of you and your business. So do you have income outside of this business? You can't just start a business today and expect to borrow for it tomorrow, because there's no past history for this business showing demonstration of earned revenues. So again, another important factor. Your business needs to have its finances and you personally in order. So your business is going to have their records looked at, tax returns, usually 3 years of tax returns. Personally for you as well, 2 to 3 years of tax returns. All the schedules showing, again, gross receipts and expenses and what can be counted as an expense and what's not. And showing a loss on your personal tax return and your business tax return is not going to net alone. You have to show income. A lot of times you'll have someone show you or tell you, okay, I've got a business but it didn't make any money, but I still want to borrow. It doesn't work that way. You need to show income. Enough income to support not only your current obligations, but the future obligation of the business in a combination. Because what it gets looked at is, again, your personal finance and your business, and then we look at a global debt service of all the debt, all the income, how that mixes together, and what's left over. Okay? I've said a lot. I didn't ask if there's any questions. Is this helpful? Is this the kind of information, again, because I can talk.
Okay. That, just with the character alone, you just touched, cases a lot.
And so another part of the personal character, as I said, is your own personal credit report, which is why I said, do we want to learn how to fix your credit? And I can give you my own personal story. I have not always been an executive making what I make, right? I was a single parent, raising a child, by myself, making $5 an hour, $6 an hour, trying to make ends meet. Credit scores in the low 600s. At one point, I'm sure it dipped below 600 because I just didn't look. You know that feeling? Do we all know that feeling? Mm-hmm. Where it's not good, so you just don't look. Right. But at that point, I stepped into the banking industry, right? And I knew absolutely nothing when I got there. But as I got there and I started getting exposed to banking and finance and credit and how it worked, I was like, I can do this. And it doesn't mean you don't have to be rich to have good credit. You don't have to have a lot in your savings account to have good credit. It's a behavior that you have to learn and understand how it works. Mm-hmm. And that low 600 score, or probably 500 score, right now, I checked my score. I'll just tell you, I checked my score today because I don't want to be a hypocrite, right? You ever had anybody tell you stuff and they're like, well, what's your score? My score today was an 845. Scores only go up to 850. So to God be all the glory, because it hasn't always been that way, but it's because I learned how the rules work and what to do to get where I wanted to be. So one of the first things that makes up credit is how you pay your bills. That's the number one thing that makes up a credit score. Do you pay on time, consistently, every single month? And even let's back up even further. How about not taking on more debt than you can afford to repay? Yeah. How about you don't even don't get that $60,000, $70,000 car loan if you're making $30,000 or $40,000 a year. I've seen that. Not if I'm doing the loan, but I've seen people do it. Don't take on more than what you can. Live in a home that's affordable to you. When I bought the house that I'm living in today, I was making a quarter of what I'm making now. But it was something that was affordable for me at that moment. And I'm still in that home because it's still very affordable. But don't take on more than what you can afford to repay so that you can make your payments on time. You don't need everything at once. You have to work for things. It takes hard work. It takes dedication. It takes discipline. That's probably the biggest piece of it. I didn't get my hair done for years because I had bills to pay. I still don't get my nails done. I don't get things done because it's just, I don't want to spend money that I don't have to spend. Needs and wants. Anyways, that's a whole nother.
Laura,
Yes.
there is a question in the chat. Someone wants to know if you can repeat the C's, please.
Sure. It is character, capacity, collateral, capital, and conditions. And again, these are the things that most bankers are going to look at when they look at you coming to them to take out a business loan specifically, or a consumer loan, but specifically in the business loan. And I know we're dealing with entrepreneurs here, so that's why I wanted to talk about that. Did everybody get that okay?
Write it in the chat. I'm putting it in the chat.
Okay, perfect. All right. So again, I don't know if you want me to stick on this or do you want me to hit one of the next C's? What do you all?
You do what you do.
I can, and I want questions from you all too. I do not mind a question if I can address maybe something that you're going through right now and you want just an opinion, my opinion.
Okay,
Vanessa.
this is Vanessa Askew. I just wrote my book, first time I ever wrote a book, and my daughter said, well, Mom, if you're gonna be selling books, you need to start an LLC. I did that, but I have no clue what it's all about. So if there's anything that you can tell me that just, because I'm just clueless, I really
Sure.
am.
So
But I knew I needed to do it.
yeah, an LLC. So when you are going into business, you need to establish a business entity for multiple reasons. One is to protect yourself from liability, which is LLC is a limited liability company, right? So that if someone, for whatever reason, wants to sue, they can't sue you personally. You've got this business entity separate from that, so that protects you. Also, you need to establish a bank account for your business.
Okay.
Because you do not want to have your business finances commingled with your personal. So you cannot open a business account for your business unless you have an established business entity. So that can be an LLC, it could be an S Corp or a corporation, partnership, whatever works for you and your business structure. So critical and important for that. And then once you have that LLC, opening that account, then you start doing transactions for the business should take place out of that business account exclusively. So that if money is spent and money is made,
Okay.
that's you're going to operate from out of that account. You should get a debit card for that account. If you can get a credit card for the business, you can do that as well. And then you can start spending and showing expenses and payment. And this is going to show payment history for the loan, for the business as well. And again, it keeps things separate so that your personal is not commingled with your business.
Oh, that's excellent. Thank you.
Any other questions?
I have a question.
Yes, ma'am.
So if you have a business and it's operating as a nonprofit,
Mm-hmm.
how does that work with getting credit and how do you establish that as well?
It's a little more complicated, if you will, because nonprofits, as you know, don't have a guarantor. I didn't mention that either. Business loans need a guarantor typically. Nonprofits are the exception because it's the entity that's the borrower, and there is no one person that's going to guarantee the debt. But typically, you're going to need to have tax returns for the nonprofit as well, at least 3 years worth, showing the profitability of this nonprofit, as well as showing how that nonprofit is getting funding. Because typically, nonprofits have grants, right? That or other, proceeds that are coming to you, donors. So you're going to need to have really strong record keeping, indicating the donations that you're receiving every year. Are they repeat people? Do you have like an agreement with with this corporation that they're gonna donate X amount to you every year? Or are you getting government grants, state, federal, whatever types of grants? So for the nonprofit, it's kind of still flows back to the same thing I said initially, showing a tax return or that character for the business itself, that it's sustainable, has sustainable, verifiable income. Does that answer your question?
Yes, it does. Thank you.
You're welcome. Any other questions? None. Okay, so I touched on a business plan.
Sorry, I'm late. There was one.
Oh, sure.
Saving incentives, motivation, and commitment to save. That was from Octavia.
Mm-hmm.
I don't know if that's a question or if it's a statement.
Saving incentives. As far as like with the financial institution, that's important as well. Another part of getting a loan, I'll build this in, is capital, right? That was one of the C's. Capital is what? Cash, money. Do you have savings? More often than not, most business lenders, financial institutions want you. You can't borrow 100%. They don't. It's called. We have a thing called loan to value. Usually, it's based on collateral, or sometimes it's, especially if it's an unsecured loan. You can typically borrow up to 80% of what maybe the purchase price is of an item. So let's say you did buy a building and it was $100,000. You need to come to the table with $20,000 of your own in cash, not borrowed, but saved. So there, if you're a business owner, that's your incentive right there to save. Because if you intend to do big business, you need to come to the table with big money. And now the exception to that might be, as I mentioned earlier for Vanessa, a credit card. You're not gonna need, to come to the table with that, but a credit card is a much smaller investment. But if you're getting a commercial vehicle, right? Say you're needing a van, a delivery vehicle, a van or a truck or equipment, or you're buying a building, you're gonna need cash down. And typically it's 20% cash down is what most lenders want to see. Is that good?
Mm-hmm.
Any other questions?
This must be really good. Everybody's quiet.
Everybody's so quiet. I hope this is what you're wanting.
Yes.
This is good. This is real good information.
Okay. Yeah, as I said, I have sat, and just my background, I sat across the table from someone who was an entrepreneur who just filed an LLC, and I've sat across from multimillionaires, and I've done everything in between. So I'm not a novice. I just wanted to just say that. I just want to put that out there. I've been doing this, like I said, a very long time. And again, it's been too long that no one has told you this.
Right.
You don't get this in high school.
Right.
You don't get it from your parents. You don't get it.
Right.
If someone doesn't tell you, how are you going to know? So I feel like it is definitely part of my calling. I know that I'm not here. I'm not where I am today for my own benefit, just for my own benefit. I want to help as many people as I can. So please, what happened? Did it die?
Oh, no. You can't restart.
All this good information given us now, so we can't get anywhere else.
Yeah.
Hold on. Jeez, come on. They kicked us out. That's all right. I'm going to log back in.
And so how important is those, like the profit and loss statement?
Very.
Okay.
Yeah, because that's what you're gonna give to an accountant to help you do your tax returns.
Mhm.
Also, your profit and loss statement is your blueprint to how your business is doing, and
Yeah.
you should want to see that every month.
Mhm.
How much is coming in,
All right, you all, we back. Are you there?
how much am I netting, and then it helps you keep a pulse on where your money is going, because too often, I feel that's what people don't do. Money is coming and going, and no one knows where and how. That's a dangerous game to play.
Yeah.
Personally,
All right, can you hear us?
for business. Yay!
Can you hear? Quetta, can you hear?
That's
Tariq?
a good question. You might want to make sure they hear that.
Yeah. Can you ask that again? I don't remember what I just said.
I don't think they're hearing us. Let me see.
Profit and loss is very important.
Yeah.
Can you all hear us?
I can hear you now.
And we
Okay.
lost it.
Okay, okay.
Yes.
Look, it was so good. Something tried to stop us, but
Yeah, the devil, man. This is good.
all right. But we back on it, y'all. Let's go.
No, yeah, I was just wondering about the